Channel here with the Co-Living Code show. Now we're actually starting to bring on the real estate investors and developers, which I'm excited about, right? So Danny Kalenov, he's actually the founder of the Diversus Fund. And I know him from a year ago because he was actually our landlord for the first Kindred Quarters location in Mission Hills, San Diego, California. Again, and you're thinking a year back when nobody really understood what co-living was, but Danny is up on just the new trends, and that's what he's going to go into detail on today's interview. It's just the unique real estate investing that he personally does, and just how he sees the future of housing going. So I will go ahead and turn it over to Danny. We miss your beautiful house. You know, everybody loved that house, but we know you have it on Airbnb. So he also owns a Rental with a View in San Diego, where he has a portfolio of beautiful homes for rent. So yeah, I'll let you go ahead and do the rest of your introduction.
Oh yeah, you're too kind, Christine. Well, we miss all your beautiful smiles, you know, and your whiteboards and your big brains prancing around the house. So glad to see that you're doing well in LA and having a lot of success, you know, with the book and with the business and everything. But yeah, we run a small boutique kind of private equity investment fund that really is geared towards helping out folks that want to diversify their future outside of just stocks, bonds, and mutual funds. You know, my mom came to this country when I was a little kid from Russia, worked her tail off for like 20 years, and then lost half of her life savings in the stock market. And when I asked her how that could happen, she was like, "Oh, I don't know. You know, I did what I was supposed to do. I invested with my financial advisor, put money in the market." And the reality is that, you know, while most people are feeling pretty good right now, we have the majority of our futures invested in things that, you know, we don't really understand and certainly can't control. And so when I saw that happen in my own family, I kind of resolved to never be dependent, at least fully dependent, on this asset class or these concepts that I felt like we didn't really have control over. And so through that, the Diversus Fund was born. We began investing our own money into creative real estate. And we quickly realized that you'd have to own a lot of single family rentals before you could replace the kind of, you know, six-figure income that, you know, individuals, you know, educated individuals, folks who are doing well are expecting to make. If the goal is to replace that income with passive income where you don't have to trade time for money, as Robert Kiyosaki says in Rich Dad, Poor Dad, you know, you got to figure out, how am I going to do this? And so we, by accident, about 10 years ago, just fell into the vacation rental world. And we realized, like, hey, we could make in a week about what we were making in a month if we just do this well. And so my business partners and I kind of said, well, if we just do this a few more times, then maybe we wouldn't have to work for money. And as is the case with a lot of entrepreneurs, we quickly ran out of our own cash. But we were surrounded by a lot of folks who had more money than they had time. And so those folks in our network were like, you know, if you want to do this again, we'd be happy to invest alongside with you, because we want to diversify outside of, you know, our 401k plan also. And so that was really what spawned the notion that we need to learn how to raise capital, raise private equity, do it in a professional, responsible manner. And then, you know, if you kind of don't know where you're going, any road will get you there, right? So when we were looking at what was important to the fund and what did we want our mission to be about, we really decided that we wanted to primarily invest in niches that were really cool and fun to be a part of. That was just something important to us. We wanted to provide a service to others that would result in them having a good time. And so vacation rentals, hotels, hospitality in general, and then, of course, co-living, all are sort of wrapped in that bucket. And so that's what we do now. We invest in projects all over the world. We raise private capital, and we want to do well, but we also want to make sure that we're doing good and really proud of what we do, and are able to sleep at night knowing that our dollars are going towards a good cause. So that was a mouthful.
No, I love it. And I totally failed to mention to everybody listening and watching this show, and Danny's modest, but, he has his BA in economics. Guy has his MBA from Harvard Business School. So it's neat to have somebody that's smart enough, that knows business, but also has the innovation and the mindset to take risks and to be creative, right? And not just be textbook, okay, let's do these boring investments and here's your safe, rate of return. It's like, hey, let's think outside the box, guys, but we can probably get a better return, right? And that's kind of, when we've had conversations before about this, which it's really, really cool. And especially that's a question, number one question I get asked is like, okay, like we don't have a house yet, we don't have the money, where do we start? And then it's like, putting them in touch with somebody like you who understands it and says, okay, hey, let's make a game plan. What kind of property are you looking for? We've looked at other properties with you, that you were on the fence about purchasing just for our concept, which is awesome, right? Because there needs to be more of you guys out there. Everybody's heard the story where in LA, I had 40 people tell me no on the phone, 40 different homeowners, one by one saying no way, until it was like number 41. And he's also an entrepreneur. It was like, let's do it. So I appreciate that, Danny, that you went into depth about, kind of the things you guys are looking to do. So one of my next questions is like, what excites you most specifically about the co-living industry?
So first of all, I think it's just really important for our country in a way to, as we evolve and as, the baby boomer generation moves on from their working years to their retired years, it's going to be up to the rest of us Gen Xers and millennials and everybody else that is essentially going to be shouldering the economic trials and tribulations of this country to carry us forward into the new era. And, when I looked at what you were doing, I was thinking back on when I was in my early 30s, not to date myself too much here, or even in my early to mid 20s, coming out of college, to have the opportunity to live in a house with a bunch of like-minded people who could serve as both role models, mentors, sounding boards. That concept seems so simple and so logical. They have tons of think tanks and Y Combinator and all kinds of accelerators, in these very niche places like Silicon Valley and New York and certain select places throughout the world. But why can't anybody just, come out of school or come out of any point in their life, surround themselves by like-minded folks, and a rising tide lifts all boats, right? So you can only do so much sitting there in your own world, going about your day, focusing on whatever it is you're focusing on. But, there's this saying that the book you don't read can't help you. Well, the person that you don't meet can't help you either. And meeting people is really tough these days, right? We're all busy, we're running around. And so I think just the absolute logic and the win-win of the concept is what intrigues me the most. Everybody wins in that. Well, if we look at your case, for example, you guys were living in, a really amazing house with a pool, a hot tub, a chef, a personal assistant. I've never lived that well in my life. And, and it was relatively affordable for all of you. You guys were all benefiting from each other. I, as the landlord, was benefiting because I was getting a higher rent than I would have if I had rented the property out long-term. And everybody was winning, and I think when you're in an industry where it's win-win-win, that's really when you're on the precipice or the cusp of something great. And so I just love the novelty of it. And I think it really is going to take, it's going to take a special kind of person to execute on a large scale. But you're doing a lot of the groundwork to help people go out and tackle that 800-pound gorilla. So just love everything about it.
Yeah, no, and see, we failed to mention, so Danny has a beautiful wife and 2 adorable kids. Otherwise, he kept saying he wanted to move in. It would have been, it is a very fun concept, right? But you were just a couple doors down from us, so.
Yeah,
You
if
came
I
to so
had the
many
option,
parties.
I would have done it in a heartbeat. If you guys had a space for a wife and two little kids in the house, I would have been there, right with you guys.
Nice, nice. That's awesome. Okay, so my next question is, as from the investing side and as a landlord, right? Because you play both roles. Like, what do you look for when you're investing in any sort of real estate concept or development?
I guess it goes. First of all, you have to know where you're going, right? Um, Without clarity of vision, strategy and tactics are not helpful, right? And there's so many people who are just kind of doing stuff, but they're not exactly sure what the end goal is. And so it's really important that the investment matches the vision. And the vision is to, as we talked about earlier, bring together a group of investors, a group of folks who really believe in the concept and understand its risks and rewards. So, just like you have to pick your properties and your opportunities carefully, you also have to pick your investors carefully. So if you're embarking on a project to acquire, let's say, $1.5 million home, and you're going to renovate it so that it has 5 bedrooms, and you're going to rent those 5 bedrooms out to folks in a co-living kind of environment. Well, if you're bringing in investors to that project, they have to understand what all that entails. And so, it's going to entail a build out component where, as you recall, we tried to make some concessions or some improvements for you guys that would accommodate your kind of lifestyle needs. You had whiteboards in the garage, you had some parking needs. And so, if I was going to do this from scratch, I would want to customize the property to really suit the needs of the inhabitants. Sure, you could take over, an old dilapidated house and kind of put some lipstick on a pig and move a bunch of young, energetic people in there. That's one way to do it. But I think the right way to do it is to understand what's important to you guys and then outfit the house accordingly. You guys had a veritable, boiler room in the downstairs where you're all at your little desks with your headsets on. I thought I was watching Wolf of Wall Street when I would come over, but that was important, right? Because you needed some separation from your sleeping space and your working space. You guys needed some private areas where you could go to be alone, and kind of get away from the hustle bustle of the house. So that requires some extra build out, and that requires time and money. And so I think to explain to your investors, hey, this is what we're doing and why, and what the typical returns would look like when we're renting out to a group of co-living folks is really the key. So it's the property itself actually comes last. A lot of people go out, they find a property, and then they figure out who the tenant's going to be, who the manager is going to be. They focus their whole investment around the property. But in our world, that's the last thing. Properties are a dime a dozen. What you need to find is, the investor, the business, the tenant, and in this case, it would be the partner, right? The co-living sponsor, if you will. Figure out what the economics are, and then go out and lastly find the house. And so that's kind of how we do it. But I think making sure that all those things are in alignment is the key to success, because if anybody's not on the same page with regard to expectations, then it's like a 3-legged stool, right? You got the landlord, the tenants, and the investors. And if any of them are disappointed, then the whole thing falls apart.
No, you're right. And then speaking of your fund, are you taking in more investment money? Do you look for accredited investors? Is that for somebody, because we have so many different people watching this show. I've already told you we have all these, real estate, developers and investors in other countries watching the show. So I know, there might be people that are like, okay, this sounds like fun. I don't want to operate a co-living home necessarily, but I want to actually play the role of like the money person.
Sure, absolutely. So We do take in new capital on an as needed basis. So if there isn't an opportunity, we don't just pour in capital. It's kind of like milk and cereal, right? You know, when you get to the end of your bowl and you didn't have enough milk, it's just Cheerios left. You got to add the milk, right? And sometimes you need to add more cereal. Well, investing is the same way, right? Between the money and the deals. You want to try to always strike a balance. So we bring the money in as the opportunities present themselves. And we're also pretty picky, pretty selective about who invests in the fund, just because we want to make sure that, again, like I was saying earlier, we do a lot of expectation setting and a lot of understanding of the investor's goals, you know? So with a co-living situation, let's just go back to the co-living example. I mean, what kind of leases are you guys signing typically? Are you guys looking for longer leases, like a year?
Yeah, Kindred Quarters, we did, like Los Angeles is a great example. We did a 3-year lease, right? Because we had like your home was furnished. So to do 6 months was no big deal, right?
Yeah.
You know, even though it broke their hearts when we had to move.
Right.
But
Sorry, guys.
right, we didn't, I know, right? But for us, it's like, for Kindred, you know, if we're gonna pay to furnish a house, then I need at least a 3-year lease for it to make sense, if not a 5-year. Some co-living concepts are doing 10-year leases, which is pretty crazy, because at that point, I'd probably rather just purchase the real estate.
Yeah.
But yeah, we're doing a 3-year, and then to our residents, we're offering month to month, like a 1-month minimum.
Okay, perfect. So let's say an investor came along and said, hey, I'm really into this concept. I saw this video, you know, I'm liking what I'm hearing. I want to do this. Well, it's important to explain to them, you know, the first question that I usually ask is, what does disaster look like? What is an absolutely horrible situation? Like, let's say that, you know, we had no income for 6 months, or let's say you lost 25% of your principal. You know, for everybody, it's a different answer. But like in this case, I mean, most of the risk lies in the sponsor, you know, the Christine, what your role was, ability to collate a group of folks who will continue to pay the rent. And if they don't, to backfill, right? To constantly be plug in the holes, the Swiss cheese, if you will. Hopefully there are no holes, but if you offer anybody a month-to-month lease, that by definition is, you know, more transient than a long-term lease. And that's why the returns right now are so low for the most part on apartment buildings and even regular rentals. Maybe if you already own it free and clear, or you have a very low cost basis, you're making money. But if you're going into any of these major coastal markets and buying a new house, thinking that you're going to make double-digit returns off of long-term rents, that's just not happening right now. Mm-hmm. So you need to take a little more risk to get those higher returns. But, you know, my investors would have to understand that, you know, I'm really investing in Christine or the Christines of the world and their ability to make good on the monthly rent, you know? So that's one of the risks. And I think just ensuring that your investors understand that is critically important.
No, and I'm so glad you talked about the lease term, right? Because, and I'm sure you'll agree with this, right? Again, you know, these upcoming generations, right? The millennials, Gen Z, like they do not want to sign a lease. Like they don't. And what's funny is even one of the bigger players right now, there's a company that has over 200 homes right now that they're doing co-living with, Bungalow. They actually have a lot of locations in San Diego. And they said the majority of the people will pay extra, like a good amount extra, just to do month to month or like a 3-month lease versus a 6 or a 12. So these people, like for the flexibility, they'll pay even more. So, which is great for, you know, you guys.
There's no question that mobility is a premium commodity in today's consumer marketplace. And I mean, just look at the gangbusters that RV sales are seeing. You know, you have millennials driving up these Airstream sales, right? People, tiny homes. People want to not be tied down. And we even have a lot of people inquire through our vacation rental business about, you know, can they stay for a month, which is essentially like a very long-term vacation rental stay. But what they want is just short-term housing and the flexibility to pick up and leave. And we are extremely comfortable with that concept. We embrace it. That's the niche we want to be investing in for sure. But you just, you know, you need to make sure that your investors, and for the most part, I mean, the private equity world is historically, you know, they're looking at security. You know what I'm saying? So if the person, if your investors, if your investor base is largely made up of, let's say, baby boomer and older folks, people who are getting away from growth and really having an income mindset, it's a return of their capital. They just want to make sure that you don't lose it. You can do it, yeah, if I make 5%, that's great, but just don't lose my money. And as that pool of investors gets bigger and bigger with the baby boomer retirement, you're going to have people that are less and less comfortable with variability. And so that's why the majority of our investor base is made up of folks in our own demographic. It's 30 to 50-year-olds who are like, yeah, I get it. I'm going to make some low double-digit returns, which is twice better than the market is doing, investing in co-living. And I understand that there's a slightly higher chance that, I might not get a rent check for a month or two. And that's just a risk-reward ratio that, you have to be willing to take. And I would say, to your audience and people reading your book and figuring out how to put all this stuff together, just make sure that the financiers that you partner with are comfortable with that, and that their investors are comfortable with that, because that's the last thing you want is calls from your money person every month going, hey, how come March you guys weren't able to make the rent, and they need to understand that that's a piece of the business model.
Yeah, because we were talking before we started about the vacation rental market too, because you're so deep into that, you know. And I was like, tell me what you made on that house in July, that we were in the winter, and you were just like, a lot. I'm like, yeah, I bet, and you're like, but it flips, there's months that aren't that great. So again, people have to understand business in depth on risk versus reward, and I know you know that really well, which is great. And then, tell everybody what markets what areas. So obviously San Diego, and then you've done some work in Belize also, right?
Yeah, so we're trying to have a broad focus, but also stay concentrated in areas where we think there's a lot of opportunity and room to grow over the next 10 to 15 years. So our main vacation rental portfolio is in San Diego. We invested pretty heavily in a resort called Mahogany Bay Village, which just opened as a 4-star luxury Hilton resort in Belize. You can go on Hilton.com and book it today, and it's a pretty amazing place. And we're also working on another pretty special project that's going to try to bring overwater bungalows to the Caribbean. Our thesis is, why do you have to go to Bora Bora or Fiji or Maldives just to stay in a little hut over pretty water? It doesn't make sense. We got that right here on this side of the world. And so we're in the sort of middle stages of financing that project, and it's coming along really well. So I would say Central America and Southern California are our primary areas of focus, but we're also bullish on other markets that have a high propensity of the kinds of folks that stay in our places, like Denver. So we did a townhome project in Denver. We were really bullish on vacation rentals there, but the regulatory environment is tough. There's a lot of municipalities, cities cracking down. I don't know if you guys are gonna, be subject to any of that stuff. I mean, I don't know if you've ever had regulatory issues, but since for the most part you're
yeah, as long as we stay over 30 days, right? It's the hotel taxes and stuff come into play if we go under 30 days.
Yeah, exactly. So yeah, kind of those are kind of our main markets right now is, Southern California, Colorado, and Belize.
Love it. Oh my gosh, those are fun areas. Good for you.
Yeah. So we find that vacation rentals and co-living kind of fit much more into the singles and doubles category. It's domestic, it's doable, there's an audience for it, people get it, you don't have to spend days and days getting people's minds around the fact that there's 5 folks who, have $2,000 a month or $3,000 a month to spend and they want to live together. Everybody gets that. That's not rocket science, and so the more that it makes sense to investors and the more tangible it is, that is really important to us as well right now. So there's a strong focus on those types of projects.
No, I love that. And again, and just being, creative enough to say, hey, we know in San Diego that the spring and summer, that's tourist season, and we're going to use this property and, as a vacation rentals, right? Because you get much more, per day on a vacation rental in summertime. But then again, being creative and saying, okay, well, maybe during the winter, we then give 6 months to co-living off, and just tell them up front, hey, 6 months, you guys can have this property, do co-living, because then again, it evens out, maybe the rent you're going to get. And again, these rents are above and beyond what if you rented to a family, annually, which is nice. So it gives you guys those options. Because how many homes do you have in San Diego in your portfolio right now?
There's about six different properties
Cool.
at this point, but we just divested. We sold 6 properties last year also.
Oh, wow.
It's because the market's getting a little crazy, a little hot to handle. So we wanted to park some cash on the sidelines, and then we're also investing in it's kind of a build versus buy, and I have a fair amount of experience in construction and development. So when real estate prices get really high, you got to try to make use of the land that you already have. And so we're building more than we're buying right now. I think I showed you earlier, but here, I'll turn my camera on.
Let's show everybody watching. So the podcast people, you guys can check it out on YouTube. Yeah, so this is his property right now in San Diego Mission Hills. Beautiful view of the bay. He's building a pool.
Yeah, that's the new pool going in. You can, unobstructed view of downtown. And, what's funny is we're not even sure what this property is going to be yet. We just know that, and I'm here in my office in the project, basically. You probably hear construction going on in the background, but, we're just betting that there's people who are going to want to live in nice homes with great amenities, great views. And it's like, as long as it appeals to just about everybody, you can kind of figure out the use later, And so whether it's a co-living space or whether it's a vacation rental, or, if you got to have a plan C too. And if worst case scenario, you have to take a property and it has to be a long-term rental, as long as you can cover your monthly expenses and the numbers pencil, that's always our backstop. It's got to make sense in that scenario, but because you can't bank on meeting a Christine, or you can't necessarily bank on the vacation rental market always being as robust as it is today. As Denver found out, and as San Diego is currently going through, there's some legislation, challenging it. Santa Monica, LA. I mean, a lot of these cities are trying to effectively ban the business, which is a shame, because if done right, it really does benefit, the community and the neighborhood, and bad actors shouldn't be allowed to operate. But I think, as long as you have a property that is conducive to a lot of different uses, I would say to all the property owners out there, keep an open mind to the co-living situation, because it's much easier on the landlord, obviously. We have a full property management team in place just to manage our vacation rentals. With you guys, we didn't really have a single call except for if you were inviting us to a party.
Yeah. There we go.
Yeah. So it's a higher and better use to do the co-living thing for sure. It's kind of like between short-term rentals and long-term rentals, but in terms of the management, the operations headache, infinitely smaller.
Yeah. No, and let's actually talk about, because, so now we're developing, Kindred, which is the software platform to I just want to make it so somebody can take their cell phone and with a couple clicks, see, who's living in that co-living home right now. Let's see a little bio on the person, because sometimes it's the people that live in the home. As amazing as your homes are amazing, we love them. But if you see the benefits and the features of the house, it's got a pool, jacuzzi, it's a smart home, and then here are the people currently living there, and a couple clicks on your phone and you can move in for a month or two. Like that's the software that we're trying to build to power all these homes, right?
Yes.
So, and you were just, I mean, I've never lived in a home that was a smart home. I mean, you had every app. I mean, I think we had like 6 different apps on our phones to power. And is that on all your properties, like going forward? Have you just been really big on the tech side?
Yeah, absolutely. Just because it makes it easier for everybody, makes it easier for our staff, our cleaning people, our maintenance crew. You know, they can all get in and out without bothering the tenants. They know when people are home, and security wise, it's safer. But yeah, I mean, you know, for you guys, you like to you know, drop the 110-inch screen down when you wanted it, right? And then you click a button and it disappears into the ceiling, right? I mean, that's like a nice feature that folks who are visiting for business, like we're getting a lot of convention and business travelers, they want a big screen when they need it and put it away when they don't. You know, they don't need a big TV sitting there the whole time. So yeah, I think tech is really important. And your point about, you know, the makeup of the house versus the house itself, I think is brilliant, because for some co-livers, what's the word?
Co-livers. Yeah.
So for some co-livers, I mean, their roommates or their housemates may be, you know, the only thing that matters, or it might matter much, much more than the property itself, because they don't plan on being there much. They're just going to sleep there. So the ability to sort or filter by person or amenities or both, I think is really, really smart.
Cool. Yeah, and then that's my final question is like, where do you see the future of co-living and like housing? You know, there's SaaS, which is software as a service. You already know that term. It's like, I see housing as a service. Like I see that's versus a product that you have to purchase or sign a year lease to. Where do you see the future of co-living and housing?
Yeah, there's no question. I mean, the commodity itself, just like, you know, I mean, Airbnb is a perfect example. Uber. I mean, this is all under the umbrella of the sharing economy, you know. And I guess you would know better than me how big the market is of people that want to just hop from house to house. You know what I'm saying? I don't know if it's 1,000 people in a city or 100,000 people in a city, or if the average length of stay is 30 days or 180 days. But at the end of the day, like, I think housing is going to move towards being more of a just a commodity, right? It's the thing that, and the app or the technology provides the service. So like, to the extent that it works and that people can move into a house and be like, yep, this is exactly what I was expecting, right? Because that's the beauty of Airbnb and Uber, is the consistency or the standardization between the reviews and the photos. You know what you're getting. People are a little bit more, I think, they're a little bit more reserved when it comes to where they're living. But if somebody said 20 years ago that you were just going to hop in a car with some stranger and they were going to take you out to dinner or home when you're drunk at 3 a.m, people are like, you're crazy. I would never do that. So, you know, the sky's the limit. And I could totally see people moving in and out of different houses on a monthly basis, you know, meeting 4 to 5 cool new people a month. And if you do that for 12 months, you just met 60 cool new people. And who doesn't want that in their Rolodex? So
yeah.
I'm a believer.
Oh my gosh. Awesome point to end on, Danny. Love it. Okay. Well, thank you so much for coming on the show. I really appreciate it. Of course, we'll put your contact info below, and I already mailed you out your copy of the book, so you'll get it. And thanks for your support since day one. Again, you were like our number one, you know, you were just like, I like this idea, like I'm on board. And that was a year ago, you know, and so thanks for thinking ahead and being such a futurist.
Thank you. Congrats on all your success, and I wish you much, much more. So thanks for including me.
Okay, thanks. Have a good day.
Yeah. Cool. You too. Bye.
Bye.